Good morning, everybody. Happy Friday. We'll get started with our live stream in about 9 minutes. So everything going good. Take a look at the pre-market prep and we'll get started here in about 9 minutes. Lines are not. Good morning, everybody. Welcome to our live stream. We'll get started here in about 2 minutes. Just doing a couple of finishing touches on here and kind of open the doors and see what gonna happen today. Okay. All right, I'll be back on in about 3 minutes and we'll get started. I'm gonna load up the right screen. Make sure the right one's showing. Yep, we're doing good so far. All right, trying to get the glare off my glasses there. Hey, good morning, everybody. Happy Friday.
Order filled. Stop filled.
Uh-oh. Just got stopped out, but that was our natural gas trade. So let's jump over here. There's a couple of things I want to point out as we start our live stream today. Friday, we got a lot of economic reports coming out. We do have a couple of things with the that historically happens starting just before the FOMC meeting comes out. Okay. And over historically, we've seen the indexes move up about 3.5%, 4% going into that meeting. Okay, now today could be that low point for the 3.5%, 4% move up, or it could be a couple of days from here. Okay, but right now we're looking for that potential move up, and it generally starts about 5 days before they make the FOMC announcement, whether they're going to raise or whether they're going to lower, or they're just going to leave unchanged. Now, this historically, this has been quite different as far as the Fed raising or lowering rates around an election. Okay. It just has not happened. It was part of their mandate not to influence elections by raising and lowering interest rates. Okay. Well, some things have changed, I guess, recently, and we can see that that's not the case anymore. Okay. Let's see. Let's get. Oh, am I still broadcasting there? Sometimes I was just minimizing that. Are we still live on the broad? I hope so. Hey, team, are we still broadcasting live on YouTube? Okay, I just minimized the window to save a few resources and thought I might have kicked myself off here. All right, let's jump out and take a look at a couple of these. There we go. And just mentioned that we might have got stopped out on natural gas. I did get stopped out. That one just, maybe my stop's just a little light, but I am going to play this to the upside. Now I can see everything here. Skipping back over here, I'm going to come in about half the size of that candle, see if I can get into it. We're looking at 2.861 or 681. Okay, so right now, natural gas, we're looking for it to move back to the upside. My first target is up at about 2.2770. Often with nat gas, I get these big candles. We had two big candles earlier, and price came down about 50% or 2/3 of that move back down. So you don't need to chase nat gas when it has a big move. Just or a big candle, especially if you're looking at it on a 5-minute chart. Just go about 50% into that candle, and sometimes you'll miss it, but many times price will drop back and grab you about 50% of that candle. Okay. Crude oil. We saw a large jump up on the FX markets, mainly because of the jobs report. Okay, and what the dollar and the 10 and the 2-year yield. They had a very strong drop off of those employment situation, or what they call as a non-farm payroll. Now, any move up today on the NYSE, we're seeing a trend is very, very low. Earlier in the session, it was up about 1.5, okay, right around that area. And then it has jumped down. It's been moving quite a bit. Anything below 60 is going to imply that there are more downticks and down volume than upticks and up volume, okay? In a way, if there's buying or selling going on. So if the markets are dropping and the trend is high, that's a positive divergence, okay? And with that positive divergence, we want to be looking for a buying opportunity. Trend high, time to buy. Trend low, below 60, and the market's going up, implies that there's a little more selling going into the up move, and trend low, time to go. So we're looking for the trend to line up with supply zones or the price indexes on that. The volatility index is up another over $1 today, okay, or 1 point, which is getting to more of that extreme where people are going to start, where big banks and institutions are collecting more insurance to offset risk. What the volatility index measures is a select group of S&P options, okay, whether it's the SPX or whether it's the not necessarily the S&P futures, but the other companies out there as far as the sorry, not company, other options out there. Okay, so what the VIX tells us is that there's more buying on the options. Okay, so think of the VIX as an insurance policy. Okay, When the VIX goes high, there's a lot more people buying insurance to offset risk for a market drop. Okay. So this is not just the small players. This is based off of the New York Stock Exchange, the composite, not the index per se. Okay. So watching that, we get an idea that traders are feeling more bullish or more bearish. Of course, the more insurance they're buying, the more bearish they may be feeling. Okay. All right, let's get back out to our charts. And we can put a couple lines around that first 5-minute candle for the open range. The FX market had a pretty sizable move up with the non-farm payrolls coming out. We also saw a very big whipsaw on the 5, 10, 30-year bonds and notes. Okay. And yeah, so the bonds and notes got a nice
Order
move up.
filled.
And we also
Orders
saw,
filled.
there we go. And we also saw that the Canadian dollar and some of the FX markets got a pretty good pop to the upside from that report. Okay. So with the Canadian dollar moving up, the open range breakout, I would be leaning more towards breaking out to the upside. The 60-minute chart on the crude oil is still making higher lows and potentially higher highs as we're going up to about that 73.20 area. Okay. Now, the Canadian dollar and crude oil have had a lot of good correlations. Okay. This is why we use it. With the crude oil, we also monitor heating oil and gasoline. Heating oil and gasoline tend to move a few minutes before the crude oil moves. Now, these are all observations, okay? What I encourage you to do if you're watching what we're doing here on our live stream is never trust what I'm saying. Find a way to validate it, okay? Or actually verify it. You don't have to validate it, okay? In this industry, all traders see some things a little different, okay? At the market institution, we like to have some factual information to back up why price is moving up or down. When it comes to supply and demand, well, basically, price moving up is because we have more buying going on than selling, okay? More buy tickets than sell tickets. Let me get that trailing stop in on that. Okay. We're getting we got our entry back on nat gas. It's still giving us a little bit of heartburn. But like I said, with those big green candles or big red candles, look for about 50% of that move. Okay. You can wait for the breakout. One thing I'll point out with the structures is notice where the 3 touches of resistance are. On the left and on the right with a low pivot point on the right. Now, what happens a lot with this type of a price pattern, okay, is when it finds the bottom and moves up, it breaks out. And once it breaks out, it doesn't usually have a big long run. It tends to come back down and find the buyers, okay? And kind of make a reversal pattern to move back to the upside, okay? All right, let's see, what else do we have going on? Let's come out to the equity indexes. Something that I'll point out that we put on our pre-market routine there is all about that 50-day moving average. The S&P, Russell, and the Dow broke the daily 50 moving average, okay? NASDAQ seems to be using it as support, okay? So on my daily
Stop
chart,
filled.
I can see that price closed below the 50-day moving average and now is right back at it, okay? Now, this is when price starts going below the 50 moving average, this can be pretty bearish signals for a lot of the retail traders. Okay. This morning, early morning, about midnight, when the volume resets on the stocks. Okay, the stocks were trading earlier. Intel got 7 million traded. Amazon, Apple. Okay, those were some of the heaviest traded in the early pre-market, which as how do I say it? As retail traders or as traders like ourselves, we don't have access to trading that early in the session. Okay. Only at 8:30 a.m. Eastern, we can then start participating. Okay. All right, so we do have currently, we got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 Dow stocks, positive over 94 cents and 1 negative. That gives us 11. 11 times 2 would be 22. Okay, cash, our physical market equals 22, and S&P futures are trading at 24. Okay. All right. So right now, futures and cash are somewhat balanced. Okay. And that means just kind of wait a little bit. We're not necessarily an inside day. I mean, we did break outside the prior session's range by a couple of ticks. So you have to have your definition. Okay. If it breaks it, it breaks it. Okay. Even if it's just a couple of ticks. Now, if your trading plan says it must go outside more than 2 ticks, 3 ticks, fine. Get that detail. Okay. And as you put together that detail, your trading plan gets more and more refined. Okay. Right now, I'm just recognizing that the S&P broke the prior session's low by a couple of ticks and has moved up through the session. So technically, it's an outside day. We have an unfilled gap on the S&P back up where price gapped down from the prior session. Okay. So big overnight drop, or sorry, yesterday's session, we had a pretty big drop and a nice pocket of points right there. Whereas we could get that move through that area very easily back up to supply. Okay. NASDAQ. All right. So we do have the Qs over here. Nothing. We do have a demand zone down below, a supply zone up on top. I'll come back to the Qs in just a moment. Okay. On the NASDAQ futures, we have a nice pocket of points. We had a light volume drop yesterday's session, and we might see price go back up through that area. Noticing the daily chart over here on the NQ, price came and hit that 88.6 and has bounced off of that 50 daily, 50 simple moving average. Okay. The next level that I would expect price to hold would be somewhere right around this range, 19,956 to 19,903. Okay. If price goes lower. Breaking the 903 level, we got a nice little range where there's nothing in between right there. And then that'd be dropping us back down to 19,700. So a couple of 100 points lower. Okay. Not getting the feeling right now that we're going to have that big of a move down unless some of the other economic reports come out and cause the market to get a little crazy. Now, we do have more economic reports coming out. Okay. At 9:45, we have a Fed speaker, Lori Logan, and we have the PMI manufacturing index for the previous month, the final number. Okay. And at 10 a.m., we have ISM manufacturing and construction spending. And then, of course, the Baker Hughes rig count about 1 p.m. Not a big market mover at that time. Okay. But something that is on the economic reports. Okay. As we've been collecting news on or news headlines, okay? And these are headlines of articles I go through. Now I'm going through the different articles on something like I'm looking at Market Watch, okay? And let me give a good example of this. Now, going through these headlines, everything that's in bold print and right on top is not necessarily trading information, okay? But it is information that we know the novice traders are looking at. How do we know they're looking at these? Well, when it comes to marketing and the advertising around on the homepage and you see flashing around and stuff like that, okay, what this website Market Watch wants is has all these different folks writing different articles for them, their company, and maybe they're taking some from other companies and so on, and they're putting them on their headlines, okay? Now, it stays up there longer if more people are clicking on it. Remember, the job of this website is to get subscribers. More subscribers, and then when you start seeing the homepage, and then you start getting different advertising, okay, the more times people click on this, implied, more people are looking deeper into the article and making an opinion of whether they're going to be bullish or bearish and how they want to see the session trade, okay? This is not what we're seeing on the price chart. This is just kind of the sentiment behind the price chart, okay? Now, over the last couple of, or this last week, let's just go with that, there has been a lot of talk about the yield, the dollar, okay? And you start kind of getting a feel of what the buzzwords were, okay? That includes, NVIDIA's earnings are not due out for a little bit longer, maybe a couple of weeks. The last quarter, when NVIDIA's earnings were started to be touted, talking about them 2 weeks in advance, it was like they were using the air pump and pumping it up, and then we got a big drop from the earnings announcements, okay? So what we're looking for on this is understanding that, hold on a second. Understanding that he who controls the media kind of controls public opinion, okay? So this is why we go through the headlines, not to look for a trade, but to get a feel for whether the market participants are bullish or whether they're bearish, okay? October jobs report, economists forecast the slowest growth in 6 months. Apple comes up short, okay? Alphabet quiets the doubters and all around strength. Now, Alphabet, part of Google, has been the stronger company. Okay, there's two companies, a Google with a L and GGOG, two different ticker symbols, okay? So Alphabet has been the company that has generated more earnings and kind of offsetting what the other company, Google, is doing, okay? Boeing workers are set to vote on Monday to talk about their latest contract negotiations to end a 7-week-old strike. Okay, Boeing capital raise provide a breather through the next year. Okay, and I just saw another article. Yeah, right here, Boeing strike and hurricane dent U.S. labor markets in October. Okay. Actually, with the hurricane, a lot more folks had jobs that didn't have jobs. A lot of labor intense cleanup and stuff like that. Okay. But, okay, we're just going off the numbers and seeing, that they need to give people an excuse. Okay. All right. Let's move on here. What do we got going on crude oil? Still kind of quiet. Notice the Globex range at 111 and at the daily ATR at 2.44. Okay. when the Globex range is right around that 40 to 70% of the daily ATR, it is a little more choppy. Okay. This is why I throw out these pieces of information to measure the Globex range and decide whether the Globex range is narrow, less than 40% of the daily ATR. If it's wide, greater than 70% of the daily ATR, and whether it's in the middle. Now, if it's in the middle, very often and pretty consistently, we have a choppy open range breakout trade. We always like to get that open range breakout because it does show that when futures and cash start to balance out, if we have a trade opportunity. So the Globex range compared to the daily ATR says, hey, right now today, just back off, taking that open range breakout. Okay, wait for price to go into a supply or into a demand zone. Okay, so this is the reason why I'm giving statistics and I'm giving pieces of information like this, is so that you can actually go and verify it for yourself. If you find it to be a valid piece of information, then you learn to incorporate that in to your trade plan, not based off of my trade plan, but based off of your research and how you perceive that information. You might find it's a little different, but that's okay. Okay. It's validating a reason why price moved up or why price moved down, and then having a good plan on how to use it. Okay. Hey, there we go. Crude oil, natural gas, we got into that. I do have a trailing stop on that. Let me check my other position here. Oh, it seems to always happen that way. Nope, I got taken out of that one there. Okay. So one of the big things I'm looking for today on the equity indexes is looking back over the last several years. Historically, indexes tend to rise starting about 5 days before the FOMC meeting. And then after the meeting, they tend to go back down. Now, the average move up that I personally have been documenting is about 3.5%, 4%. Sometimes a little more, sometimes a little less. And based on the last FOMC announcement, okay, we didn't have the same thing that happened historically. Okay, so it's not 100%. Okay, but and that you have to recognize that sometimes it's not going to do what you think it should. That doesn't mean it's wrong. Okay, it's just on average, if it's 85% of the time it works in your favor. Okay, that's how you calculate your risk going into a trade. Okay, so I just wanted to point out that last time was not the same as we have noticed prior. Sometimes get these little bugs crawling up. By the way, we are broadcasting from Bali, so it is a little dark behind me. It is evening here. We're about 12 hours difference, and I was just informed that we have daylight savings or change. So now the team and myself, we got to stay up much later. All right, let's get back to trying to find some trades. In the spirit of anticipating that markets are going to move up 3.5%, 4% over the next 4 days before the FOMC meeting, okay, we need a fresh accumulation of orders. Okay, we need price to drop into a demand zone, or we need a fresh accumulation of orders to be manufactured. Right now, we do have resistance on the S&P. Being an outside day, we can participate in a breakout trade. Okay, and excuse me. Right now, we don't have a buy territory for a demand zone until price breaks out of that. Now, I do find a leg base, right in this range. I am going to point out that this area down below from yesterday's close, just noticed it. And with the small gap up, and gaps are a leg candle. Another thing that we observe is that price right now currently on the S&P is inside the prior session's range. Now, what that means to us here at the market institution is that we take that into consideration and say, well, hey, if price is opening inside the prior day's trading range, we have a high percentage of time that the gap fills the same trading day. So a demand zone around that area is a very high probability of an opportunity to go long. Gap fill, and then we have an unfilled opening gap up above, okay? Now, we also correlate the timing of when price arrives in a demand zone or in a supply zone. Between 8 a.m. and 11 a.m. Eastern, we like to see price arrive at the demand zone or supply zone on the quarter hour up to 3 minutes after the quarter hour, okay? I know this is getting really specific, but a very specific trading plan will keep you out of harm's way, okay? So if price comes down to fill the gap earlier than the quarter hour, gets into that zone, I'm going to anticipate that the zone below would be a higher probability trading opportunity at that 5,700. That does cause a lot more people to become bearish based off of what we're talking about on the S&P 500. The S&P 500 futures daily chart. That price is still currently slightly below the 50 simple moving average on a daily chart. Okay, so if price goes down, people might get a little overly bearish and think, and then price is dropping to find the buyers down below right around a 5,700 area. Okay, I'm noticing my charts are slowing up again a little bit as we're getting closer to session. So I'm going to stop my video, still share my screen, but stop the video so I can free up a few of those resources so we can see the charts. Okay. Now notice we're looking for a gap fill on the NASDAQ, S&P, Dow. Okay, and we're looking for price to fill that gap, hit that demand zone on the quarter hour. Okay, and up to 3 minutes after. So we got at the start here, we have about
Order filled.
the next 3 minutes in order to participate in it. Oh, it looks like we got small stop. Well, we got stopped out on the natural gas. Okay, we had a trailing stop on that. Okay. Now we just got to monitor all those. Dow is definitely an inside day. Very high probability the gaps fill the same trading day. And we'll use that area right near the session close yesterday. And we'll just look for price to arrive there on the quarter hour, okay? We have a supply zone that was in the overnight session, unfilled opening gap, 42,317, 42,355 on the Dow. And a qualified prep screen zone, 42,488, 42,523. The difference is a prep screen zone is formed during the regular trading hours on increasing volume, whereas a regular zone using the leg base is it can be outside the regular trading hours. Okay, so a few more screening, a few more criteria for a prep screen zone versus just the leg base candles. Russell, okay, here we go. Russell, also in price opening inside the prior day's trading range. We'd be looking for that gap fill. Might have to adjust the time frame on this. 21, just go up a notch. Yep, let's go down 19. There we go. I think more folks were expecting a lot more volatility here at the open. The S&P breaking out yet? And let's come over to, I do have some trades set up on the S&P already. Let's bring that up here. Taking a breakout trade, I noticed that there was a speed bump just on the other side of it. Okay. Let me open this up, tell you what a speed bump is. This is that little area just above a resistance area, whereas we could see price pop, do a breakout trade, and then get met with a little resistance here, and then pull back, okay? So when you see that the speed bump over to the left-hand side of the chart is present, okay, taking a breakout trade simply means there's additional risk, okay? And probably should not take the breakout trade. And we can see that that is an overnight zone. It is nope, that's a regular session zone, it looks like. Okay, it is an area where we might find some additional sellers, okay? So let it pop out into that and then pull back and then look for the long opportunity. Keeping in mind, okay, is that there is an unfilled opening gap down below. And most likely we will fill that gap the same trading day. Okay. We also have an unfilled opening gap from yesterday, back up top a little bit more. So it sounds like I might be saying, yeah, go long, no, go short. No, right now there's information that's going that can be used both ways. Okay. Both of them right now have higher risk. Okay. There is a lot more weight that I'm putting on the gap fill at this point, and that would mean that price needs to come back down, okay? This speed bump area is not a place to take a trade short because that zone is in the wrong location, okay? It would be used as a profit target if I took the breakout trade, okay? Details, right? Team, how are we doing on questions? I'm still working on one monitor. All good? Oh, I like that. All right, so we've got the S&P, we're looking for the gap fill, and that would be back down to 57.38. Now we're just looking for a way to get into this trade, okay? And let's go back, check out gold. Yesterday's big 46, 47 point drop on gold took us right into a demand zone. And just as I was wrapping up my session yesterday, I went ahead and bought 2 more micro contracts, bringing it back to 5 micros on this trade, okay? Now, futures and trading, it's first in, first out, Okay, so I only have one contract left of the micros. Okay, one micro contract from the original position. Okay, the other ones I've taken profit on and we added back on and so on. Okay, so right now we're back up to 5 micros and we're just running this as it continues to move up. Okay. Now let's jump out and see what's going on here with the exchange traded funds. With the exchange traded funds, we can see the SPY having the same little area as far as that speed bump just above resistance. Okay. We're also seeing the Qs where it broke out, dropped down, found some buyers, came back up and hit the same height as that high point before the drop yesterday. Hasn't gone anywhere yet. We don't have a new resistance area yet. We only have 2 touches. And we'll be looking for 3 for resistance. Okay. IWM has gapped up into a supply zone in the right location. Okay. Currently, price is still moving up through this leg base, about ready to break the distal line on it. And I just noticed this area right above it. And we're going to come back to a smaller time frame to just kind of look on the futures. Because what we're expecting on the Russell right now is a gap fill. Okay. So if we're expecting that gap fill on the Russell, how would we get into that trade to go short? Okay. Well, we'd need to see price go up into a supply zone, right? Dow. Okay, we do have an economic report coming out at 9:45 and a Fed speaker. Okay. Now things might get a little volatile as prices coming back up to fill yesterday's unfilled opening gap. I'm going to set this trade up here. We have about 23, let's see, about 28 points risk on this trade. Let's just round that to 20 to 55. Yeah, so about 25, 30 points on the Dow. We have risk on here. Okay. So I'm going to place this order as we get closer to the quarter hour and we have economic reports. Price may pop up to that area to find the sellers. Okay. 42,317. Let's come up here. 317. I'm taking 2 micros. And then I'm going to place my protective stop loss about that 42,356 area. Okay. So that trade is set up. We're still about 5 minutes away from price intersecting with that area. If it intersects on time, fantastic. We have a great trade. We still have another couple of minutes. If price goes into that supply zone earlier than the quarter hour, then I'll cancel my order. Okay. Dow trade is set up. Let's come up to the NASDAQ. NASDAQ set for a breakout trade. Let's go to our tick chart. Now, today when I notice things moving around, I notice I have a lot of extra bars on here. Okay. Price looks a little jumpy. Okay. The picture was not right. As you start identifying the candle patterns, it makes you feel comfortable. The moment it feels like you're really in getting intensified right here. Okay, a lot of extra bars, more than normal. You may have to adjust that tick size. Okay, so if we're looking at a tick chart that's based on transaction, okay, or yeah, transactions. Okay, there was a lot more transactions in the overnight session and in the day session yesterday that caused more bars to be formed. Okay, and currently we are still having a lot of bars forming. So I'm going to adjust this to 1,000 tick. 1,000. And I may need to go a little higher, okay? So when you adjust your tick chart is when something doesn't quite look right or feel right, or it feels like you have more noise on the chart than normal, okay? Because it does document, each candle represents 1,000 transactions. It just means it was busier that day, more things being traded. So be willing to adjust the tick frame. And then once you see a tick frame that says, oh, that feels all right, okay, I can read that chart, then you found the one that matches what you're looking for, okay? All right, so I increased my tick from 750, I went to 1,500, and now the chart feels a little and looks a little bit better for me, okay? For you, it may be a different tick size, okay? And we also have the NASDAQ approaching that resistance area, not a zone, okay? But we still are expecting the gap fill. We're a couple of minutes away from the economic report, okay? So we're going to look for an opportunity to take a short trade. I'm going to still stick with the micros here. Taking a short, 20,180. Right, and then we'll place our protective stop about 20,199 or 20,200, whichever you prefer. Okay, so we got 1 minute. Price has not arrived in the supply zone early, so based on the economic report, if it does skip up to that area, then we'll have a trade ready to go. How about the S&P? S&P has its breakout. S&P went through the speed bump area. I already have a trade set up on the S&P, looking for it to intersect at 57.81. Still expecting that gap fill for today's gap since we opened inside the prior day's trading range. How we doing on the Dow? Right, Dow's quiet. Russell, all quiet. Okay. Boy, natural gas just got that little fake out breakout. Now is pulling back. Nice move up on that one. Crude oil. Gobex range compared to the daily ATR tells you to kind of stay out of that open range breakout trade on days like this. Doesn't look like the economic report had much of an impact. Okay. Diamonds are in between a gap up, or sorry, a gap down and a gap up. Okay. I'm not sure where that one's going to go, other than, yeah, just kind of recognizing the gaps. The SPY still holding that move just above the breakout area, and we are anticipating a gap fill today. QQQ is expecting a gap fill today. Price did break out. Then there's a little leg base right in that range. Kind of like a speed bump area. And looking around. All right, so our zones are still active from what we picked up on earlier. We've kind of gone through the equity indexes. I'm going to come back and look at a couple other products, but we're in that waiting mode right now. The information that we collected on the equity indexes, all of them, is that we should have a gap filled today. High probability, not 100%. Okay. And if we were to get that gap fill today, the price would have to go down. In order for us to get into a trade where price would go down, we need a supply zone. Okay. So we broke down to the smaller time frames on the S&P and the NASDAQ, and we found a small time frame zone. Now we are looking for price to intersect with that supply zone or with that demand zone on the quarter hour. Okay. Now, what all of this information should be doing for you is saying, hey, it's okay to wait. I get it. Okay. I see why I am waiting. And we have what, 12 minutes before the top of the hour with our next economic report coming out. But we also just had a Fed chairman speaking, and they're probably just getting through the opening remarks 2 minutes after their start time. Okay. Providing they started on time, yada, yada, yada. Okay. So we're still in that kind of that sweet spot. We're now we have about 11 minutes before the top of the hour. So for the S&P, if price triggers that short trade earlier, then I'm only going to look for a little one-to-one pullback. If it arrives on time, I'm going to plan on staying a little bit longer and let price come back down to my demand. Okay. Now, if you hear what I'm talking about, we're waiting for trades. Okay. But we are also calculating a plan. If this happens, then I will. Okay. So if price hits that supply zone, 57.81, at the top of the hour and up to 3 minutes after, then I will stay in the trade as long as I can and look for a bigger move down to fill the gap. Okay. If price arrives in that supply zone earlier than the quarter hour, okay, I'm going to anticipate a small one-to-one in and out type trade. Now, if I have to set the trade up and walk away, I want to have a plan for each one. Okay. You may even look at having a conditional trade set up based on the time. Okay. That means making your trade going short in supply or long in demand within a certain amount of time. So it turns on the trade at that time or it turns it off. Okay. Which is a little more advanced, and not all charting platforms have a conditional order where you can use a time element. Boy, I really want to get some trading going, but looks like we're waiting. The market's waiting for something as well. We already have a couple of trades set up. Basically, trade set up on the S&P, NASDAQ, and the Dow. And the Russell, I don't have anything set up on yet. Oh, there we go. Notice the trend just got a nice pop to the upside. Okay. When the trend is above 1.5 intraday, you have to anticipate that there's more upticks, more up volume, so to speak, on the NYSE. Okay, somebody's buying those stocks. When somebody starts buying those stocks on the NYSE, that will impact the S&P 500 and the Dow 30 type stocks. Okay, and it takes a little time. Okay, because these fundamental indicators are a representation of the whole index. Okay, the cash market, and it takes longer for things to catch up when we're trading the futures. Futures follow. Okay. All right, nat gas getting that pullback. And as our low pivot point is on the right side, okay, I'm anticipating a price may come a little more deeper into that zone. You can see price popped out just above the resistance, and there's multiple speed bumps right over to the left, okay? But the structure itself, having a low pivot point on the right side, okay, tells us to expect the fake
Order
out
filled.
breakout.
Order filled.
Yep, we just got short the S&P. What's wrong with this short position right now on the S&P? We just talked about it. What time did it get into that supply zone? Yeah. So we're not looking for this to be a big running trend, right? Now, I'm anticipating about a 1-to-1 move down, okay? Since I'm expecting not to stay in the trade very long, okay, and I'm expecting just, a quick out, I can start to adjust my stop loss down, okay? And I'll move it down to that, risking about $50 on this, okay? If I should get bigger than 1-to-1 move, fantastic. Right now, we're at that 1-to-1, okay? But my expectations right now is that price went into that supply zone earlier than the quarter hour, is that it's going to go through it, okay? I'm going to grab my 200
Order
bucks,
filled.
do the happy dance. See, having that plan and testing out your own trading plan and saying, hey, if price arrives in my demand zone or supply zone on the quarter hour between 8 a.m. and 11 a.m., are my trades more successful or are they less successful? Okay. You decide, okay, based on your observation. Because you might say, well, why'd you get out of the trade? Why don't you just let it work? Well, because we have seen many times when price hits that supply zone or that demand zone earlier than the quarter hour, it then tends to go through, okay? And I'm still expecting the gap fill, but again, rules on top of rules are all based off of our observations here. All right, NASDAQ getting a nice move up. Let's check our tick chart out on the NASDAQ. How close are we to that supply, okay? Or actually, that's not necessarily supply, it's a resistance area. And that's why I have the line there, okay? So we're 4 minutes away. If price goes into that zone earlier, we're going to look for a small pullback, okay? Like a 1-to-1, what just happened, okay? Dow, okay? Doesn't look as close. Russell, still waiting. Now gas, I'll look for a price to pull back, make a double bottom. Okay. I'm looking for a deeper pullback. Okay. If you take anything away from today's live stream, measuring each of your products, the Globex range, and comparing it to a daily ATR, you'll find a lot of useful information as to when to be more aggressively trading and when to be more aggressively waiting on your trade. Okay. Excuse me. Price going deeper into that zone. Interesting. See, the Qs, SPY, IWM are all in supply zones and or speed bump areas. And now watch this one, okay? This would be another way for you to verify that, hey, a price arrives in that supply zone earlier than the quarter hour, it often goes through it. Boom, okay? Witnessing the information and watching it work right in front of you is one of the fastest ways to accelerate your learning curve, okay? Two minutes to the economic report. We can see the FX markets, the euro has pulled back. Aussie dollar is still hanging out there. Japanese yen pulled back. Bean oil's in the supply zone, retesting that. Let's set that one up. Just after we watch. There we go. We're trading a December contract.
Order filled. Order filled. What did we get hit on? Dow? No. Let's get the NASDAQ. Oh, beautiful. It hit it on the quarter hour, didn't it? So what are we planning to do with this? Are we just a hit and run, or are we looking to stay in it to see where that gap fill is at? I don't know. I can't let go of the mouse. It's moving in my direction. It's a great entry. We're now at a 1-to-1. The gap fill is down around this area here. Now, things are still pretty volatile, and I don't need to take a loss anymore on this. So I'm going to adjust my stop loss. I'm going to come right Yeah, I'll just leave it right in that range right there, okay? So I got about $52 worth of risk on this trade with the intent of looking for the gap fill. Okay, this could be a pretty sizable trade back down, okay? Another thing that we've been watching as well is when we have this double level of resistance, the upper one, we tend to have a nice move up to the resistance, and then we often see the price comes back down out of that, okay? Now, I still have a risk on this trade of $50, and you can see things are getting volatile. I want to stay in this trade a little bit longer, okay? And the reason I want to stay in this trade a little bit longer is because of the time that price hit the supply zone, okay? Did anybody get into the NASDAQ trade? Now, if you're watching the live stream, don't hesitate on your questions. Ask your questions as they come up, okay? We want to see and we want to help you understand what's going on the price chart, why we are expecting certain things, why some trades we only stay in for just a few moments, and some trades we stay in a little bit longer. It's all about the time that price arrives in the zone, our expectations from our pre-market routine, information gathering, okay? All right, we're looking at right about 2 to 1 on the NQ, coming down pretty good. Nice job, Summer. Good job, everybody. All right, how are we doing with the Dow? Nothing. Russell? Nothing. S&P? Getting a little pullback. It did hold the zone. That's not the norm, okay? It looks like they're starting to form a fresh accumulation of sell orders, and we'll see if it builds a good support. I do like these topping patterns just above a resistance area, okay? And I would anticipate if price breaks this area, and I have a new lake base form, so I can get into it, is that taking a trade short and staying in the trade a little bit longer at 57.72, okay? I need a new lake base group of candles to form, okay? I need a place I can put my protective stop loss. And we don't have any of that yet. Okay, how about our NQ trade? Still looking good. Now, if we can continue to make a topping pattern where we have 3 touches of support, we could actually add on to that position once it breaks that support, okay? We're still anticipating the gap fill. Summer, I'm glad you came back in because you're getting to see that, you know, the market can pay for what you want, okay? You know, if you want to a class, a subscription service or something like that. It's nice to be part of a community and a trading place where you can recover your tuition in just a couple of trades. Glad to get to see that. All right, I'm gonna come over here. Let's put those little blue dots. I want to reduce the time frame because I want to find that leg base group of candles. Looks like it's way down here. Inside where we had that small breakout above the Globex high, okay, which ignited our buy territory. We're now looking for price to come back and find the buyers. Okay. About 2.677. Okay, so I'm coming here. Placing an order back there. Okay.
Order filled.
Once I'm filled, I'll place my protective stop loss. Did the NASDAQ take us out? All right. Now I'm going to still hit this trade one more time, but I want to take a quick look at the stocks. Right now on the stocks, it looks like things are getting a little, or the stocks are getting just a little pop right here. I'm going to come back and hit this again.
Order filled. Order filled. Order filled.
Got the Dow. Uh-oh, what's wrong with the Dow? What time did we hit the zone? Come back up to get that unfilled gap. I'm only looking for like a 1-to-1, maybe 2-to-1 move back down. My stop loss is in place. I got about $39 risk on a couple of micros. Did S&P go through the zone? It did. Imagine that.
Order filled.
Okay, so now I don't have a zone. I need another fresh accumulation of orders. Just looking for a 1-to-1 move down. Still hasn't quite filled the gap yet. Anybody take the Dow? Who can tell me if the Dow futures are overbought or oversold at this point relative to cash? Right now we have one Dow stock negative over 94 cents, and we have 15 positive. Now these are the 14 times 20 would be 280. Okay. S&P futures are trading at 353 and cash equals 280. I'm sorry, Dow futures. Dow futures are overbought relative to the cash based on our calculation. Futures are trading at a premium as they hit that supply zone. But due to the time that price hit that supply zone, we only may get a short-term pullback. 1-to-1, maybe a 2-to-1. Okay, we do have a trade set up on that gas, just waiting for it. Crude oil. Whole lot of nothing. Wow. Gold. And let's look at our equity index, exchange traded funds. Looks like it took out the speed bump on each one of those. Yeah, it looks like diamonds has filled the gap from yesterday. That's kind of where we're at now with our trade. And we have taken out the unfilled opening gap. I'm going to take that off my chart. And now we still anticipate today's gap to fill. Okay. Just may have to find a better place to enter. Now, all trading has risk. Okay. Once your trade becomes active and your stop is in place, you recognize the dollar amount you can lose on a trade. If that dollar amount is too big and outside your trading plan, then get out of the trade immediately. Don't even think about it, okay? Because sometimes it happens. Everybody wants to make a trade. Everybody is eager to jump in, okay? I'm no different. But if I got into this trade and this was $390 instead of $39, I might say, "Ooh, it's not giving me an immediate pullback out of this the leg base zone." So, and it arrived in the zone at a different time and so on and so forth. Do I want to stay with the trade or not? Okay. Assessing your risk on the trade and telling yourself out loud what that dollar amount is, you then can either accept the risk or cancel the trade or get out, okay? And I really want to talk about that risk on a trade simply because a lot of people don't always focus on the reward, which is, we already know where the reward is, and that's back down here about the gap fill, okay? It's how do we manage that risk and recognizing that? Because many times traders get into trades and they have not assessed the dollar amount for the risk. They just see a zone and they say, "Oh yeah, I can handle that," until the dollar amount hits you 1 or 2 times, and then you're going, "Ooh, I need to rearrange my thoughts on there." All right, NASDAQ still moving up. S&P still moving up. On the S&P, let's come out to the larger time frame. Yeah, we're right in that pocket of points. Look how fast price is moving up. Okay. We have 2 Dow stocks negative over 94 cents, and we have 16 that are positive, which gives us 14 times 2, 28. Cash equals positive 28 on the S&P. Right now, the S&P futures are trading at 54, 55. S&P futures are overbought relative to cash. Okay. Let's come back down to our, well, we just hit another quarter hour, so now we're gonna have to wait till the bottom of the hour. Okay. We do have a supply zone up here, 5801, 5805. Okay. Our economic reports are pretty much done for today. 5801, I'm gonna place an order out there. Right. And there we go. Then once that order triggers, I need to quickly reference the time to see what time it arrived in that zone, okay? So I'm anticipating that within the next 15 minutes or so, 13 minutes, that price will intersect with that supply zone. If price intersects with that supply zone
Order
on time,
filled.
then I'm gonna anticipate price coming down and filling the gap. That'll be my target. Back down to the gap fill. Okay. Our bean oil trade. Just about took every part of our stop loss. ETFs are still moving up, so futures would continue to move up. But that Russell is rocking. And we're looking for that unfilled open gap. Let's get a trade set up on this one, okay? And depending on the arrival into that zone, we'll determine whether we're taking a 1-to-1 or we're going to stay in the trade a little bit longer. Setting the trade up to sell short, 22.45, right? Or 44.90. Here we go. Once filled, check the time, set my stop. My stop will be at 22.51. Okay, if I'm filled at 24 or 22.45-ish, okay, and my stop is at 22.51, I am risking 6 points on the Russell. Okay, 6 points. So 6 points with 2 mini contracts, okay, would be roughly about $300 risk. $50 a point times 2 contracts, okay? I'm gonna set this trade up in another account as well. Let's bring up the Russell. What's our number we were looking at on Russell? 22.45. Okay, that's up and going. Dollar's moving up. That would be bearish for the equity indexes. Also, the 10-year and 2-year yield have been moving up the last couple of hours. Okay. Now, that means if futures are overbought relative to cash, just going to take a few minutes for the equity indexes to get up to their supply zones. Okay, if the dollar, then the yield's continuing to move up, then we're gonna see our equity indexes correct for all of that and come back down. Okay. Out of YM just blew through that zone. Let's get that one out of the way. And since it's moving so fast, and with the recent move back up on the dollar and the yield, we'll look for price. I'm going to set this trade up on the Dow, the zone that I have marked, 42,488, our prep screen zone. Oh, this will be a good little snapshot here. Okay. 42,488. So short there. And anticipate price to pull back. Now, depending on what time it arrives, it'll either be a short-term trade or a longer-term trade. Okay, if it arrives on the quarter hour, top or bottom of the hour, we'll stay a little longer. If it arrives earlier than the quarter hour or top or bottom, then we'll just do a little hit and run. Okay. And how are we doing on the NQ? SP. Yeah, they're just kind of out in the middle of no man's land. Let's see if there's any information on the tick chart. No fresh accumulation of orders to take a trade short. Just have to wait for zones to come into play. So it looks like we have a trade set up on the S&P. I do have a short on the Russell. Let me see. Yeah, I just placed an order to sell short at 22 in this area here. If it arrives on the quarter hour, then I intend to stay in a little bit longer, a little bit more than a 1-to-1. If it arrives early, then it's just I'm going to take a quick little profit on it. I'm not going to stay long at all. Okay, great question. Okay, why are we looking for going short when the markets are going straight up? Okay. Well, what is the next trading opportunity? And do we often see gaps fill the same trading day on an inside, well, when we start off inside the prior day's trading range? Okay. So in the back of my mind, I'm anticipating that price is going to come back and fill the gap. Okay, based on my studies and observation. And as I'm looking at the equity indexes, where would I go long? Okay, fair question. So on the NASDAQ, I got a leg base down here, I'm waiting. Okay, on the NASDAQ, I have another leg base with candles down here. Okay, so we're closer to a supply zone to take a short-term trade. Okay, we're anticipating staying in the trade a short-term or a long-term based off of what time price arrives at that supply zone. Okay, now same goes for price arriving at demand. We got to wait for it. why I'm looking to sell short when the markets are going straight up. Well, I'm expecting that gap fill the same trading day, okay, for one reason.
Order filled.
And we just hit something early. What did we hit? Oh, we got our net gas trade. Yeah, come in and place a trailing stop. See, it comes down to, if I'm looking for a trade opportunity, what's my best opportunity right now? I need to find supply in order to take it back down to demand, correct? Or I need to wait for price to come to demand before entering to go long now. So since I'm looking for either short term, and I want to use this as a lesson as well, each time we do a live trading room, it's about understanding these environments, okay? If we're going to have a short-term trade versus a long-term trade, or we can say a counter trend trade versus a trending trade. So right now, as prices are going up to supply, we're looking for a counter trend trade, okay? Yeah, I'm looking for all the above, okay? And I don't have any breakout trades left on the short-term one. The short-term breakout trades were earlier in the session, okay? And earlier in the session, taking the breakout trade based on the information we had was a little more elevated risk, okay? But these are great questions to ask, and thanks for asking them, because the more time that you spend asking those questions, then you can research and validate and say, hey, that works with the way I think the market should do it, or that is something totally different, okay? And what the bottom line gets down to is that you have to observe the information, learn how to utilize that information for your trading plan. For right now, what I'm looking at as far as
Order filled.
what we hit, we got the S&P and we're 1 minute early. Okay. So 1 minute early, I'm looking for a short-term counter trend trade. Let me give it just a moment. Wow, look at it going strong through that. All right, we got the 10:30. Let's see if we get that pullback. I'm only focused on a 1-to-1 short-term trade on the S&P, or I can get out now. Okay, it's only going to be a counter trend trade. Yep, I got that one up there too, Chris. So even though we had really good moves to the upside, you have to really ask yourself, where would I get in that trade? How would I take it? So now that we have a buy territory, nice solid breakout, okay? For a demand zone entry, you might be waiting a little bit longer, back to the gap fill down here, okay? And that's about 57.40-ish, okay? We already missed the breakout trade. NASDAQ. Also a fresh buy territory. We're now waiting for a supply and demand trade entry. Back around the gap fill. Now that gap fill may happen today. It has a large percentage of the time it does, or it may not. Okay, it's not 100%, but it does have a high probability. That's why I was looking for counter trend trades. Okay. All right, Dow coming up. We do have a trade set up here, and we've got about 1 minute for it to arrive. All right. Well, that's going to conclude our live stream, live trading room today. Okay, we had a couple of small trades, short-term trades. I am anticipating the gap fill. So don't, I'm sorry, understand the things that we talked about 90 minutes ago. Okay. What was going on 90 minutes ago when we were putting together or gathering the information? Okay. And here we go. We got about a 1-to-1 out of that S&P. So now that we have a 1-to-1 and it is only a counter trend trade, I can take the trade. Okay. Or if I think it's going to continue, okay, or I want it to continue and I want to take the risk, then minimize the risk. Okay. So I just moved mine. I have now $12.50 risk on one mini contract. If price does come on down to fill the gap, well, I had a great trade entry. This is a counter trend trade, and it did hit on the time that we're looking
Order
for
filled.
it, and so on. And what are we at here? Oh, one more. Coming up on our bean oil trade. That's working out pretty good. As soon as we get 1-to-1 move out, then I'm going to adjust my stop loss down to about that 46 area, which will give me about $50 risk. I could do that right now. All right. Let's see if that one continues. Let's see, what else do we have that's before we wrap up our session here? FX markets are pulling back. Crude's pulling back. Crude finally getting a move. Soybean meal coming down to find demand. Equity indexes are kind of last to make a move. I've reduced the risk on my counter trend trade on the S&P. As far as looking for a demand zone, pretty far down below, okay, to splice back into that. Okay, I just don't have the right picture to come into that trade until price comes back down. Okay. NASDAQ. Okay, we got a short-term trade out of that, and we're looking demand's down at 20,157 or 20,085, and we're still expecting the gap fill. Okay. All right. On that note, I'm going to wrap up this live stream, live trading session. I appreciate everybody for joining us on Friday, and we're going to continue doing the live stream on Friday for another couple of weeks. So if you like what you see, get registered, join us. Okay. If you have questions or comments about our products or services, please reach out. Let us know on the TMI website. Okay. I'm wishing everybody a happy Friday. Enjoy your day. I'm about to wrap up my evening. I got a couple of trades that are working here. And, that's another thing that I found is that this time zone, because it gets pretty late, you're 12 hours difference than the East Coast time right now, is that I stopped trading around 11 a.m. Eastern or 12 a.m. Eastern time. And I've been keeping my profits more. I'm not hanging out all day trying to take another little stab at it. So that was a good lesson learned for myself, okay? Everybody have a wonderful weekend. We'll see you bright and early Monday. Happy trading. Bye now.